Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of November 14th through November 18th, where we're going to try to answer the question, is the bear market in hibernation now? So thank you to everyone who's joining us for the live stream today in the live chat. Arthur Duncan, Walter Lyons, Nug M, Ollie in the Bay. Glad to see you all. Hope you're all doing well. So again, let's get started with part one of our weekly trading game plan for the trading week of November 14th through November 18th. So here's our Google document with our notes for our part one of our weekly trading game plan. And this is a public Google document. So you can access this, all the links, tools, etc. that we use in our weekly trading game plans. You should be able to find the link to this Google document in the description box below. Also a link to the public Google Drive folder where we keep all of our Google documents with all of our notes for our weekly trading game plan. So you can always go back and reference some of the bonus videos, the tools, our notes, our strategies, etc. So in part one, we do all our market analysis, our market review from last week. We'll talk about strategy, so stick around to the end of the live stream, the end of the video. We'll talk about trading ideas, strategies, etc. And then that will provide us for the input for part two of our weekly trading game plan tomorrow. And we'll choose our stocks to put on our top swing trading stocks to put on our watch list and our bullpen and our shopping list, etc. Welcome to Ricky Khan, Tanvir, Spacula. Glad to see you all. Hope you're all doing well. Thank you for joining us in the live stream. So let's get started. Let's see if we can answer the question, is the bear market in hibernation now? So we'll start. We'll look at the indices and FinViz. Look at the home page, see how the markets ended up on Friday. So you can see they made a recovery on Friday. All the indices ended up. NASDAQ made a pretty good rally. They all ended up on Friday. If we look under the covers a little bit, we see almost more than a 2-to-1 or almost a 2-to-1 advancers to decliners on Friday. More new highs and new lows. Now we have 67, almost 68% above the 50-day moving average, only 32% below, but we still have 65% below the 200-day moving average and only 35% above. So again, when we'll look at the indices, we'll look at the futures, it's still questionable. Is the bear market over? Is the bear market just in hibernation? And that's what we'll talk about today. We can see the heat map. A lot of the tech was green. It was a big tech run, risk on in general. We see some healthcare, etc. Was negative in the red. Again, sector rotation. We'll talk again about sector rotations and opportunities there as well. And thank you, Spacula, for prompting people. Please, if you like this content as we're going through it, please, we hope you'll punch the like button, help us with the YouTube algorithm, help us bring more BeachBum traders back into the markets, not miss out on this November, December best months of the year for trading. Also, this post-midterm election run up that we talked about again last week. We'll talk about a little more in a moment. See the news, FTX news. I will address that at the end, so at least a little bit. We see some politics, gains, etc. See oil's run up, and we'll see in the futures it's been bouncing between 80 and 90. We see that steep run up at 2 p.m. Natural gas been bouncing between about 5 and 7. We saw the dollar dump on Thursday, and that fueled part of this rally. And we saw dollar-denominated commodities make a run. So gold, silver, copper, you will see that in the futures. All the dollar-denominated commodities made a run up on the weakness of the dollar, because now we can see the euro is up above parity. It's now at 103 to the dollar. The pound also made a run. Again, we saw the dollar dramatically weaken. I think it was on Thursday. We'll look in the futures and we'll see that. We also see the treasuries dip back down below 10-year dip below 4%. Again, more fuel for the risk on rally that we saw, and particularly in the NASDAQ. I think the NASDAQ had the best days it's had since 2020 or something like that, but it's had a phenomenal run the past couple days, and we'll talk about how we played that and how we're going to play that going forward. Just something to note here is, we'll talk about interest rates again. Interest rates are still going up. There's still predictions that the Fed's going to end up somewhere between 4.5 and 5, and that means that these, in my humble opinion, again, none of this is financial advice. We're not financial advisors. It's education and hopefully some level of entertainment only. But again, I think these treasury rates, these treasury yields have to go up to at least get closer to where the Fed's going to end up, which is 4.5 to 5. So just be aware. I think this is a transitory yield decline. So be prepared. Welcome, David Spielvogel. Good to see you. Flip of the Ship, Born to be Free. Glad to see you all in the chat. If I missed anybody, let me know. So now we'll jump forward to the indices and look at, see if we can answer the question, is the bear market in hibernation? Is it dead? We'll start with the daily chart of the SPY. We can see it's made this run up. It's now above the 20-day moving average. It's above the 50-day moving average. I know it's hard to see in this FinBiz graph, but it's still below the 200-day moving average. And we can see the strong resistance at about 410-ish. So it's approaching this resistance. It's still below the 200-day. It did make, it made a higher low here. It made a higher high there. Let's zoom out to the weekly. So again, we can see it's above. It broke through the 20-week moving average. Looks like it made a little bit of a higher low, still well below the 50-week moving average. So it's still uncertain. This is still a lower low here. Is it going to roll over and go farther down or not? Again, uncertain. Look at the Qs. Just trying to keep up with the chat a little bit too. Welcome, Ellen Krentz. Glad to see you in the live chat as well. Thank you for joining us. So again, the Qs are still below its 20-week moving average, looking to go up and test. We see almost a little tweezer, big run up this past week. The Dow, we'll see, it made a pretty dramatic breakout. So again, it's broken out of its 20-week, broke out of its 50-week. It's testing the previous high, might go up and test the previous high. So the Dow is definitely, the strongest of the three major indices. IWM. So again, we can see on a weekly, it's above its 20-week moving average, still below its 50. It's kind of retesting that resistance level, but it hasn't retested that previous high. And we can see how that moving average, that 50-week moving average, it's adhering to that pretty much as a resistance level. So it would need to break out of there to, continue on an upward trend. So again, a little in terms of, being out of a bear market, it's uncertain. I will talk about, do I think the bear market's in hibernation and reasons why I believe that may be the case in a minute. So let's look at the VIX. We'll see the VIX declined, dropped off pretty dramatically, now about 24. So again, when the CPI data came in a little lighter than expected, all the markets rallied up, the VIX dropped down, dollar weakened dramatically. And so, we'll talk about potential catalysts that might, quote, poke the poke the bear and knock it out of hibernation going forward as well. So I guess there's no more inflation from the way the market. Yeah, yeah. Well, we'll talk about that. Alan Krantz says, yeah, the market's acting like there is no more inflation. Again, when we get to those numbers, I'll talk about that in more detail. Okay, I'm going to look at BTI again. This is the total market index, so it's like 4,000 stocks across all the indices. So I kind of like this. This is a broad view. We can see it broke out, gapped up, made a run. We see it's, we got a couple resistance levels. We got a downward trend level around 206 or so, and then we've got a higher level pivot point at 210. So, we got some room up. It is, making a run up, and this gap up is significant. Again, as we'll see in the futures, etc. And I'll talk about that. I would not be surprised if in a day or two we get a retracement. We need to get, gap fills. We need to get some consolidation. So again, I wouldn't be at all surprised to see a retracement in a day or two. And we'll, again, see that in the futures as well. So let's look at the groups, sectors, industries. And again, you'll find links in the notes to some additional videos I have on how to use FinViz, how to use the groups tab, how to find individual stocks in these sectors. But if we look at the hot sectors from Friday, we can see energy, basic materials, technology, and consumer cyclical were hot. Healthcare and utilities were the weakest. They were, sector rotation out of those sectors and into technology, energy, basic materials. And technology was strong for the whole week, particularly Thursday, Friday after the CPI. Had these, big runs, risk on, and the risk on sectors had a major run. Real estate got a positive rotation. And again, energy for the week was actually one of the underperformers. And then we saw this, strong rotation on Friday into energy. Again, for the month, the strong sectors, basic materials, energy still up there, technology relatively strong, financial, real estate, the worst are communication services and consumer cyclical. And we see for the quarter, energy is, obviously the strong performer. So again, we're seeing a lot of this sector rotation. I saw this on Friday. If you looked at this on Thursday, you would have seen energy was near the bottom. And then you got the strong, and I think basic materials as well prior to the dollar weakening. Once the dollar weakened, and we saw the strong rotation in energy. So I would recommend, again, not financial advice, but if you look at this chart and you see where the underperformer is and who's the top performer, we're seeing profit taking in the top performing sectors, and then money rotate into the weaker sectors on a pretty regular daily basis. So that's a strategy that you can use to your advantage using this graph. Also, our ETF spreadsheet has a nice, performance of the various sectors within the S&P. Good, you guys are having a good chat. Glad to see that. Glad to see our BeachBum traders helping each other out, having good discussion. So we'll look at the industries. So remember a couple weeks ago, we started watching aluminum as it was one of the lower performers. And now we saw, Friday, aluminum was one of the top performers. See a lot of basic materials, copper, some oil. We'll see gold, silvers, relatively up there. Again, this is something I like to do on a daily basis, is go to the bottom and see, okay, we saw Thursday, I think solar was at the top, and then Friday solar's at the bottom. So again, you can see those rotations when you see the money start to flow out of one sector and into another sector. There's an opportunity if you're a shorter term trader, a scalper, momentum trader, breakout trader. These are good tools to use. see where it's at the bottom, and when that starts moving, we see coal. We've seen a lot of rotations in and out of coal. So for the week, again, basic materials was pretty good. Gold, silver, aluminum. Well, it was at the bottom, coal. Okay, so I would not be at all surprised to see more rotation into coal. In the energy sector, again, we see them segregating or subdividing the energy sector and rotating in and out of components, solar, coal, oil, natural gas, etc. So again, tools that you can use. Watch these sector rotations. When one starts moving up, you can go long that. When they start taking profit in another sector, you can start cashing out, selling the rips. So okay, now let's talk about all the economic data we got from last week. Let me get a drink a sec, and then we'll start talking about all the data we got and what we're coming up on. Okay, so I don't think there was much. I'll go to the investing.com. Let me bring this guy up, and we'll let him come up while we talk about some of the highlights I did capture. And again, just for a reminder, as this data comes out as quickly as I can, I will capture that data from investing.com and I will post it in the Surf the Markets channel in our Discord. Our Discord is free to join. You can find an invite in the description box below. If I can find the banner, I'll throw it up there. Okay. So again, as soon as the data comes out, I try to take a screenshot from investing.com, grab the actual raw data, post that out there as quickly as I can, along with any other observations during the week. So join us in our Discord. The larger our BeachBum trading community is in our Discord, helping each other out. It's beneficial to everyone. So if you're not already a member of our free Discord, please sign up with the free invite in the description box below. You can also find the invite in the link section of our BeachBum Trading homepage, beachbumtrading.com, bum without the U. Links to all of our social media sites, our Discord server, our Facebook group, etc., trading platforms, trading tools, all these tools and resources we use, you can find in the link section of our homepage as well. So we're going to talk about layoffs in our strategy and what some of the implications of some of these layoffs may mean. Wednesday, Meta announced they were laying off 11K or 13% of their staff. I think it was Friday, Disney's laying off. This is a wave, rolling waves of layoffs. And we've talked about this for several weeks. We saw this coming. We're in a recession or we're going into a recession. I'll talk about some of the implications again and strategies when we get to the end. But we're going to continue to see more and more companies laying off. And it'll be a domino effect, a rolling wave of layoffs. So Wednesday was Meta. Like I said, I know Disney was on Thursday or Friday, like Friday after their dump on earnings. And tomorrow we'll talk about Disney and how we're playing Disney. Arthur asked, can I use the live stream to ask who is new here? Anybody new today in the stream, raise your hand, and hopefully Arthur or SPAC or someone can acknowledge you. Let me know anybody who's new here. Yeah, I missed it. So again, raise your hand if you're new, please. Let us know so we can welcome you. So Wednesday, we got mortgage data. You see mortgages keep going up. We've got purchasing going up. Mortgage markets in recession and decline. We know that mortgage companies are laying off. I know that from personal experience with people that are getting laid off from that industry. Wholesale inventories were down a little bit, which is a little positive. Then we saw crude oil inventories was much higher than expected. You can see that's about triple what was expected, and still oil prices went up, and that's more the weakness of the dollar and other factors with than the inventories. People aren't really paying attention to these numbers much, in my humble opinion, nowadays. So but you can see inventories are building, so we've got more supply of oil, even though the oil price is going up. So gasoline production, refinery utilization's up. So again, we're getting more supply. It's just quiet, and the prices are still volatile. So Thursday we got jobless claims and CPI. I'll talk about CPI first since that was the big news. It came in just a little lower than expected. We can see it was 0.3 versus 0.5 forecast. Core was 6.3 versus 6.5 year on year. Again, it was a little lighter. Again, this is October, month on month, 0.4 versus 0.6. So 7.7 versus 8. So like, I'm sorry if I forgot who made the comment. I don't know if it was Alan or Arthur, but yeah, the market behaved like, oh, we don't have inflation anymore. No, inflation's still hot, 7.7%, but it was less than was expected, and so the market went nuts, rallied, exuberance. Now they're talking about the Fed going only 0.5 in December, pivot. Don't believe it. So but the market rallied on it, and so there was an opportunity there to play that exuberant run. Again, we've got more CPI coming out in December, and we'll talk about that. We'll talk about when the next Fed meeting is and what potentially could happen around that. This is useful as well. Initial jobless claims came in higher than expected, so more layoffs than expected. Unemployment rates going up a little bit. Um, but it's not disastrous. Ongoing jobless claims was pretty much in line. Real earnings was pretty much in line with the last, and then we see natural gas storage was it was a little below expectations, but still positive. So here's some of the headlines I grabbed off FinViz right as the CPI and unemployment data came out. Stocks jump, yields drop after inflation data. So we saw the dollar plummet, yields drop, and all the futures, all the indices jumped. Treasury yields tumble, and inflation rate cools. Futures rocket. CPI inflation cools slightly, rising 7.7. Now, again, as we just mentioned, 7.7. If we had that, before, that would have been a shock. Terrible, awful. Now, since it's less than 8, it rallies exuberantly because it's not 8 or worse. So. Again, inflation's still hot, sticky. We've been saying that for a long time. It's not going to come down quickly. So, and then Friday we got the sentiment data. Inflation expectations actually went up, and consumer sentiment, as you can see, actually declined. So the consumer is less positive about conditions now, and they expect higher inflation. So the consumer is, the CPI came in lighter, but the consumer says things are getting worse. So maybe the CPI data was transitory, and maybe December won't be as good. And what will that do to the markets and to, interest rate expectations in December? So let me jump over. I'm going to jump over to investing.com. We'll spin through that. Also, just a quick reminder, this Friday coming up is options expiration for November. So If you're holding options, be aware of that. Also, we get a tug of war on OPEX dates. So people trying to pull above or below the strike price. So be prepared on Friday for that tug of war, possibly some increased volatility. So let me jump over to investing.com, check the chat a second, see if I'm missing any questions. You guys are having a good discussion. That's great. Um, Ricky Khan says inflation. A lot of inflation is driven by supply shortages in the supply chain. Yes, that's definitely been true. One of the things, I think it was Kramer, somebody pointed out that some of the possibly the lighter CPI was some of that alleviating. But again, there's a lot of discussions about why the CPI come in light. What does it mean going forward? So just real quick, I'll spin through this. Um, so we had a lot of Fed talk as well this week, and let me talk about that because it's pertinent to the CPI. Is in general, investor tends to be hawkish, but they're still talking that that there's a lot more work to do. Inflation's still high, unacceptably high. The employment picture is still decent. The economy is still resilient, and they still have a very hawkish stance. So they're going to keep raising rates, whether it's 75 in December or 50. My personal opinion, not financial advice, just my opinion. I think they're going to go 75. I think December potentially could be hot. Hotter than expected or in line, and I think they'll probably go 75. They might go 50. Irregardless, interest rates are going to keep going up at least into December, and probably to a lesser extent into early next year. So our strategy has been and should continue to be for rising interest rates. So pretty much what we covered. There's mortgage stuff, crude oil, got that. There's all the CPI data, got that. Again, Fed talk. There's the sentiment data. So let's see what we got coming up next week. So that says inflation expectations. We got some material stuff. Then we got PPI, so producer data is on Tuesday. So that'll be an input look into inflation. So that will be important on Tuesday. Is inflation abating at the front end of the supply chain? So as someone just mentioned, are there still issues in the supply chain that are causing producer prices to be high? And you see there's PPI year on year 8.3. They're expecting it to come down a little bit, but that's still a driving force in the whole supply chain. The whole economy is the producer prices. If they're continuing to be high, then consumer prices are going to continue to go up, right? We got retail sales. It's expected to be pretty strong. If it's bad, that would be bad for the economy. Production, again, signs of recession. Standard oil and natural gas inventories. Building, we know the housing market, the real estate's pretty much in recession. And we got jobless claims on Thursday. Is the employment picture weakening faster than the Fed would like? And home sales on Friday. So again, we pretty much know home sales, real estate's in a recession, going to continue to decline along with the economy, rising interest rates, rising mortgages, etc. So flip of the shipper says he thinks a softish landing is possible. We will see. I am not of that camp, but we will see. The Fed presidents are saying, higher for longer, and they're still talking 2% inflation. And we talked about that last week as well. They're still holding to their 2% inflation target, and it's going to take an awful lot to get inflation down to 2% from 8%, right? So earnings, I should have left that up. We'll briefly look at where we're at with the earnings calendar here. And then again, in Webull, we can see a shorter term earnings calendar. So you can go to investing.com, go to calendar, select earnings calendar, see everybody that's reporting. We still got quite a bit. So be aware of companies you're looking at to buy. When are their earnings? Do you want to wait till after their earnings report? Is there somebody in the same industry reporting earnings? Because you'll see moves in sentiment. If one company in a sector reports bad, then others in that sector will go down. If they report well, the assumption is others may do well. So be aware. As you can see, we still have a ton of earnings. We're still right in the middle of heavy earnings calendar. So again, you can see all the companies listed. You can do a find in here for particular ones that you're interested in. So, and I know other Benzinga and earnings whispers, etc., have graphical views of this earnings calendar, and I'll show you in a minute in Webull where a near-term earnings calendar can be found. Okay, so we'll jump over to the market screen in Webull. Again, Friday we can see, more advancers than decliners, almost 2-1. Although the majority of the advancers was small, we only have a few, with a major decline. Net inflow, again, this second week in a row, I think we've seen the NASDAQ outperform NYSE in terms of inflows, but we can see it's declining towards the end of the day. Here's where you can see a near-term earnings calendar. Is if you go there and hit calendar, you can select earnings, dividend splits. So you can also see any kind of splits coming up. But if you want to see the earnings that are coming up in the nearest term, you can see it in the market screen. I'm on the online browser version of Webull, and on the market screen you can see who's coming up. Is it after market close, before market open, during market hours, etc. So you can see what's coming up next. So then we'll look at the best performing industries for the week. Because we know Friday almost everything was green. So we see hardware software was positive, household goods positive, IT, semiconductors. We're going to talk about semiconductors tomorrow. And it was very strong on Thursday, Friday, along with all the tech. So I think there might be an opportunity there. Office equipment up. Financial also, we're going to talk about the run in financials and a possible opportunity there. And retail, basic materials, uranium. Again, we've talked about how we played the run into uranium. That was a good sector rotation. It was beaten down and it looked like an opportunity, and it was, and they rotated back into uranium. It went up and we made good money. So again, these sector rotations are opportunities to make money. Look at the ETFs on Friday, see the markets. I would expect bullish. There's the TQQQ, so that's the NASDAQ bullish, leverage, very positive. China was bullish, had a run in yen. That's the China leveraged ETF. Europe had a run. Again, it was pretty much risk on and everybody ran, and we'll see that in the futures in a minute. Dow up, S&P up. VIX, I don't see it, but I would expect down. So SVXY is the short on the VIX. Russell up, so small caps. And then you see China had a run, Europe was second. So just a quick reminder, again, this is the online browser version of Webull. This is the market screen. I have videos on how to use this market screen for this, as well as we have others on how to use Webull for due diligence, etc. If you're not already using Webull, they're still offering their 12 free stocks to open and fund a new account. Webull is our primary trading platform, do most of our trading. As you can see, we do market analysis, we do due diligence using Webull. So if you're not already using Webull, you might as well get an account. If you put $1 in, you can get up to 12 free stocks. So just by signing up, you get 2 free stocks up to $300. If you deposit even a cent, you get up to 10 more free stocks, each valued up to $3,000. So again, if you're not already using Webull, it's our favorite platform. You can trade from 4 a.m. To 8 p.m. and there's some nice opportunities at that 4 a.m. open on occasion. And so I'm usually around looking for opportunities at that 4 a.m. open using Webull. And again, it's my opinion, it gives you an edge being able to start trading at 4 a.m. and take advantage of some of those opportunities. So get your copy of Webull if you're not already using it. Get your 12 free stocks. If you're not happy with it, you can always cash out your free stocks and use whatever platform you prefer. So, and I use the online browser version and the PC-based version. They also have a good mobile app. A lot of the other BeachBum traders are very active in the Webull mobile app, including their community, etc. So, okay, let me grab a drink, and we'll jump to the futures in FinBiz. Okay. So here we can see, all the indices ran up Thursday, Friday, big run up on Thursday after the CPI data, exuberant run. I was a little surprised that we got an extension on Friday. I'll talk about how we traded using Fang Yu, how we're going to trade these going forward. Again, we kind of see it broke out above the previous high. And again, we'll talk about is the bear market in hibernation now at this point. We see the Dow's made a nice rally. If we look at some of these previous runs in these indices, looks like, they typically last, 3 days, 2 to 3 days, and then we get a retracement, a correction. So again, I'm kind of expecting that. I don't know if we'll get, 3-day run, 2-day run, and then a correction, but be ready when that happens. That is typical. As we can see, we got 2 days and then a correction, 3 days and then a correction. So there, NASDAQ 3 days correction. So be ready when they start rolling over. We would expect that kind of correction, and then the direction they head from there, we'll have to wait and see as well. Alan says shocked. Yeah. Well, again, and this is why we're saying is the bear market and hibernation. Again, I'll get to that more in strategy, but there wasn't a reason for it not to continue other than the fact that there was such an exaggerated run on Thursday, and that's kind of why I kind of expected a correction, and when it started to we didn't want to get caught in that correction on Thursday, and then we got the run up, and you saw they started to decline and then ran up at the end of the day. So Let's see Europe, big gap up again. All the indices, big run up Thursday, Friday on that CPI news. DAX, the VIX, big drop. You see oil's been pretty much bouncing between 80 and 90, 85, 90. Again, daily opportunities there. We use Gush and Drip or UCO and SCO. Again, day trading opportunities any given day. And oil and particularly in natural gas. Natural gas even more volatile, but you see it's just pretty much chopping back and forth, bouncing between a little under 5 or a little under 6, and 7. So it'll dip into the 5s, bounce back up to 7. And again, there were several days where these swings were 10%. So you could have made 10% going one way or the other. We typically play natural gas using BOIL, which is long, cold, KOLD, short. And again, if you're a nimble day trader, scalper, etc., just be careful. Again, these are pretty quick moves, but there were several days where it swung a total of 10% from bottom to top or top to bottom. So see the huge run in gold on the dollar weakness, huge run in silver on the dollar weakness, copper. Um, Unfortunately, let me show you this. I've shown this before, but it looks like this is like super high. And I was looking for an ETF to short copper, and I haven't been able to find a one to short copper. There's one to long, but if you zoom out on this chart, you just right click and open any of those futures charts in FinViz. You can see it. It's in the near term, yeah, it made a really big run, but you see it's still relatively quite a bit below where it was previously. So it's probably going to hit a resistance there and probably retrace some. This had two catalysts. You had the dollar weakness and also the China reopening rumors. So again, if it looks excessively high, right click, zoom out, and see if this is it really a high or is there a longer term trend that it's just a relative high. And so you can see a lot of these commodities have run up. Coffee ran down. Sugar up. Okay, so here's the treasuries. So again, on that CPI data, we see that big pop in treasury prices, which was the big decline in treasury yield. So I don't know if Tanbeer's still in TLT, but TLT, TMF, etc., had a nice recovery on Thursday, Friday. But again, I don't think those yields are sustainable. I think yields are gonna have to keep going up because the Fed's going to keep raising rates. So I don't think those below 4% yields are sustainable. So I think we're going to get another dip. Particularly when the Fed actually raises interest rates again, and we'll see that in the upcoming events in a minute. So it was a nice run. You'll see tomorrow I sold a covered call on my TMF position, made some money. When it does dip back down, I'll buy it back, keep the profits, keep the difference in profit, and then we'll rinse and repeat. See, the euro made this big run. It's now above parity. All these currencies made this huge run when the dollar dumped on Thursday. So, again, that CPI data and the dollar just dumped. You see, crazy moves in these currencies. So if you're in the forex trading, you may be some real opportunities on a retracement in the dollar. Again, I would expect some correction because of such an exaggerated move in these directions. But we have limited options if you're just trading ETFs and stocks. The options are limited in terms of taking advantage of these currency runs. So. Okay, let me grab a drink again. Sorry, my voice is pretty scratchy today. Okay. Meant to just a reminder, the next FOMC meeting is December 13 and 14. And I believe that the next CPI comes out just before that meeting, if I remember correctly. So here's some trends, strategies, trading ideas, etc. In addition to, let me talk about is the bear market and hibernation first. I believe the bear market is hibernating right now, and part of that is the fact that we're in between FOMC meetings. Also, last week we talked about how uh, the after the midterms elections, the 6 months and 12 months after the midterm elections, the markets tend to be positive, have a good return. That November, December are some of your best trading months. So again, I think from now through the end of the year, then we get into the Santa rally and all that. Now coming up, we will talk about tax loss harvesting, tax loss selling, and the impact. That may have and when that may start to occur. But again, I think right now, my opinion, but I think with this light CPI number that we've got, unless we get something else to poke the bear, I think the bear is hibernating right now, and I think we're gonna have a rally for some period of time. Now, is this a bull rally in a bear market, or is this the start of a new bull market? I don't think this is a bull market. And again, this is all my opinion. But I think in early 23, we're going to really see a recession starting to hit. We've got the layoffs. We've got people, are starting to max out their credit. They're depleting their savings, maxing out their credit. But I don't really believe that's going to hit us till 23. So, now till the end of the year, I think we're looking good. If we can keep the bear in hibernation, don't poke the bear, I think we can have a nice rally. And so that's kind of how we're playing it. And you'll see that in our positions that we're starting to take tomorrow in part two. I did want to briefly talk about the FTX thing because it is big in the news, the FTX bankruptcy. Um, I felt compelled to talk about this just because I don't want to see any more beach bum traders get hurt. I know this may be controversial. Hopefully, I won't get beat up too bad. But I do think it's important to warn people. I don't want to see people get hurt with this FTX fallout. I don't think this is nearly over. I think it's going to get pretty ugly. And again, I don't want to see anyone get hurt. Uh, some of you, if you've been around the beach bum trading community for a while, you've probably heard me say this before. But with this whole cryptocurrency thing, we've seen this movie before. We know how it ends, and it doesn't end well. And we saw this in the rise and fall of e-currencies, which was in the early 2000s. I can tell you those stories in more detail at some other time. I know I mentioned some of them, but this looks like the same movie, and it doesn't end well. And this, I believe, is the start of that fall of cryptocurrency. So, um, again, not financial advice. I just don't want to see anybody get hurt, and I would get out of any cryptocurrencies that require an exchange. You see, a lot of the problems are related to these exchanges. Um, and I think this is going to, affect all the exchanges, etc. So if it requires a third party exchange to get your money back, I would stay away from it. Also, if it doesn't have a significant utility other than as a currency, I think this fallout is going to pretty much destroy the use of these blockchain facilities as currencies. I think that's the major fallout. Whether things that have utility like Ethereum, Ether will survive this is very questionable in my humble opinion. They may because they have a utility outside of a currency, and they may not because the sentiment may be so negative relative to anything related to a cryptocurrency that they may all fall with this fallout. Also, companies that are wholly dependent on mining any of these cryptocurrencies. So, if all their revenue is based on making money with a cryptocurrency, that its only utility is as a currency, I would get out of them and stay away from them because I think they're going to fall. Um, Again, all this is my opinion. And other things, investors in FTX is I don't know the detail. I don't remember all the details of who all's invested. I know a SoftBank, I think BlackRock, and they're going to be negatively affected by that. And then their investors, are going to uh, be negatively affected. So this is going to have a domino effect, in my opinion. So it's good to know who was invested in FTX, who's going to be negatively impacted. They're going to have to, they're going to lose. My Tesla lost money on Bitcoin, MicroStrategies, etc. And their investors aren't going to be happy. They're going to sue. So their stock's going to go down, and it's going to cascade from there. So again, we've seen this movie before. It doesn't end well. Please be safe. We don't. Again, the whole point is we don't want to see anybody get hurt. So I thought I would share my opinions, our experience. We're not touching any of this anytime soon. So, and I think the depths of the fallout is going to take some time. So, again, my opinion. We talked about the layoffs and the cost cutting. Um, Again, negative recessionary ripple effects. So we saw, we talked about Disney was one of the things. The other thing I heard Disney was doing is job freezes, and also limiting travel to essential travel only. And that's a typical thing companies do when they just start the cycle of layoffs. Is first they freeze hiring, they freeze spending, so capex spending. So that means they're not going to buy new computer hardware, they're not going to buy new enterprise software. Um, they're going to keep their cash, and they're going to limit travel to essential travel only, etc. So they're limiting their costs to things they absolutely have to spend money on. So what does that mean? Well, that means anybody dependent on business travel is going to get hit. So airlines, hotels, restaurants, again, anything related to business travel is going to get hit. Hardware, computer enterprise software, etc., are going to continue to get hit going forward. Now, the past quarter, they might have done okay because that was reporting back from 3 months ago when this had just started. So, again, it's going to get worse. And again, we were talking about the recession. So I don't think we're going to see the depths of this until early 23, after the holiday season. And also, that's the end of fiscal year. So a lot of companies will probably freeze until the end of the fiscal year. So I think we'll see a decline in spending from enterprises through the end of the year. So now, on the other hand, as I mentioned, I think consumers are going to spend every dime they can get their hands on now through the end of the year, and they're going to run out of money early next year. So again, my opinion. So we talked about that. I think the bear market's in hibernation as long as somebody doesn't poke the bear, as long as we don't get some kind of unexpectedly negative reading like out of PPI or CPI, or I don't, if the Fed doesn't shock the markets now, there is a risk if the markets start to expect a 50 basis point raise in mid-December and they come out with 75. That could be a shock to the market. That could poke the bear temporarily. So, but I think otherwise now through the end of the year is a good opportunity to make some money. So, and again, it doesn't really matter which way the market's going. Our strategy is to be able to make money in any kind of market. So, and hopefully that's what we're trying to share with our fellow beach bum traders is there are ways to make money in any kind of market. There's always a bull market somewhere, and we just go to where there are opportunities to make money. So it doesn't really matter if it's a bull market, a bear market, a range bound market, whatever. So if I missed any questions, please throw them up in the chat real quick. I'll try to address them. I know I haven't been able to keep up with the chat as well. You all are having a great discussion. I hope it helps. Please let me know what you think of all this in the comments below in our free Discord. Again, our Discord's free to join. Please join us in the Discord. A lot of great traders in there. We help each other out, help each other succeed in our trading careers as much as we're able. So again, put your questions in the comments in the Discord. We've also got a Facebook group. You can ask questions, put comments in, or via any of our social media sites. We also have a Reddit community. So any of these forums are fair game, and we will try to respond as we are able. Also, if you have any requests to look at stocks for part 2 tomorrow, please post them in the Discord. Please tag us or post them in the comments below. If you want us to take a look at some kind of individual stock, we'll do what we're able to. And please come back same time tomorrow. We will be using all these strategies, all this market analysis, all these trade ideas to pick our individual stocks to put on our watch list for next week. So for the week of November 14th through November 18th. And we'll talk about what we've got on our top swing trading stock lists to watch for this week, our bullpen, our shopping list. And again, we'll talk about more trade ideas, more strategies for making money in the current market. So thank you all for joining us in the live stream, the live chat. It looked like a lively discussion going on. And have a great rest of your day. And we'll look forward to seeing you again tomorrow. Thank you. Have a great day. Bye.